Welcome to the June Special Topic Monthly Webinar. Keep in mind this webinar is not considered tax advice or any opinion or legal advice. And today we'll be covering common questions that we get with new business owners regarding their entities. And at the very end, we'll also cover several tips for reducing risk and improving your record keeping. My name is Thomas Jones. I'm with OTA Tax Pros. I'm the tax manager. And we help students with tax consultations, preparation. We set up trading companies, real estate companies, and all sorts of other kinds of companies, LLCs, C corporations. We've even done some not-for-profit entities. And we've also set up self-directed retirement plans, including 401ks, IRAs, bookkeeping setups. We've represented people before the IRS, and we do these monthly webinars. This is a common question that we get, not only from Online Trading Academy students, but nearly every single person that is looking to incorporate. Is it better to incorporate as an LLC or an S corporation? And I'm going to narrow this a little bit more to specifically whether you're a trading company or not. Because whether you are doing real estate or trucking has a huge, big difference on the type of entity that would be best suited for your company. Here's a list of all the factors that we consider. And this is why I really can't say whether an LLC or an S corporation is best for your trading company. We look at, your trade strategy. We look at your long-term financial goals. We look at what asset classes you'll be trading. Have you had gains or losses year to date? Have you had a past history of trading? Do you have a past? We also look at your past tax history. That has a lot to do with your specific recommendations, whether we're going to incorporate a certain way and whether certain losses might be offset by a company's gains. We also look at what the ownership is going to be like. Do you have any family members, any kids or spouses or friends that will be trading also? Excuse me, I just changed slides. We also look at personal financing needs. Whether you're looking at getting a mortgage or a car loan soon has a lot to do with whether you should incorporate a certain way. We also look at the capital structure. Capital structure has to do with whether you're financing your company with debt or whether you're going to be making an equity contribution and how much of each will be used to fund the trading accounts. We also take a look at some of the legal aspects of your entity. Are there any impending divorces, bankruptcies? Do you have any other risk in other areas that we might want to consider? We take a look at your estate plan. Do you have a specific trust set up? Do you have certain beneficiaries you'd like to inherit the assets in case anything were to happen to you? Here's a huge one. We look at the residency, not just what country that you are, because most of the students that we're working with are United States citizens. We have worked with people outside the United States, but we specifically look at what state do you have your domicile in. And that will help determine your business nexus, which is basically a term for your business residency. And specifically, we take a look at the state and local laws, fees, and taxes. We're familiar with many states, and we don't work only in California where we have our headquarters. Very commonly, we also work in states such as New York, Texas, Florida. We have a lot of people in Atlanta and in Michigan, Minnesota, Wisconsin, Seattle, Portland, all across the United States, Hawaii, and we have a few in Alaska, I believe. We take a look at other entities you might have. Whether you have another self-employed business entity such as a law firm that maybe you also have on the side, if you're an attorney or medical practice or a trucking company or a lighting business, those are all different kinds of entities that we want to take into consideration because those do have an impact on your trading business as well. We take a look at your retirement plans. There's a lot of questions that we ask in these consultations when we make recommendations whether to incorporate. And a lot of these things might be evident on your tax return, which is why we request the last 2 years' tax returns because it helps us understand your specific situation much better. But so, for example, in your retirement plans, that might be where we recommend setting up a self-directed 401k or whether there are times that we say, no, you shouldn't incorporate, and maybe you should start trading, with this specific type strategy to save you taxes. We look at whether you have health insurance and what those health insurance needs will be, and if you have other self-employment activities. And most importantly, we look at your taxes. So given all those factors, it's very difficult to recommend within a couple minutes any specific type of entity. And even after we go through all those factors, sometimes it's just a matter of a couple $1,000s whether it's better to do an LLC or an S corporation. For example, given all the factors are pretty much the same in a certain state, we might look at doing an S corporation that might provide certain health insurance benefits, or even a C corporation in very, very limited exceptions for a medical reimbursement plan. But the tax benefits or the savings by doing that specific structure might only be a couple hundred or a couple $1,000s. That might not necessarily warrant you having to do it a corporation. Maybe it'd be easier and a little bit more efficient to do an LLC. There's so many different reasons why we might make a recommendation. And if you're not sure, definitely ask us. And if you've already worked with us in setting up a company and you don't remember, feel free to ask us. But these are many of the different factors we would like to consider. And sometimes those factors might change, and we might look at doing a different strategy down the road. A common question we get with new business owners trying to set up a checking account or other bank accounts is the bank will ask if they're a financial institution. Are you? The answer is no. Financial institutions, as far as the bank is concerned, are essentially other banks or institutions that compete for the same clientele as banks. We have a lot of students who set up these accounts, and sometimes the banker will say, nope, sorry, we can't set up this type of entity. We believe you're a financial institution. Obviously, the bank doesn't want to help you set up another bank that's going to compete for the same clients. It's not good business sense for them. However, almost every single client that I can think of is not a financial institution. The ones that we work with, we don't work with banks. Obviously, that's not something we're qualified and prepared to help you incorporate a bank. But as a trading company, almost always you're going to be trading your own capital, and you're not a financial institution as far as we can tell for tax or bank or for legal purposes. Another similar question that we get is whether my broker, another question that we get frequently is my broker is asking if I'm a financial institution. Are you? Chances are not likely. Under securities and commodities law, financial institutions are essentially institutions which manage large sums of capital, trade other people's money, or are licensed or registered with an exchange or regulatory body. Given this definition, almost all the traders we work with are considered non-professionals. That means you trade your own capital, you're not licensed, you're not registered, you don't receive any fees for any services you provide, you're not receiving any kind of profits or commissions from trading other people's money, and usually the only reason why you would set up a trading company or incorporate is going to be for tax or asset protection purposes. Under these circumstances, in general, we'll find that most people are not considered a financial institution under securities or commodities law, and sometimes the broker might just need a little bit more clarification into why you set up a company and how that is different between a financial institution under their guidelines and under ours. If this is something that's still hindering you in order to set up a business trading account, talk to us. We do have some tools, and we have found some solutions that get a little bit more detailed than I want to cover right now. But this is a part of the advisory package that we include with almost every single package when we set up a trading company. We want to make sure that you have the tools and resources to be successful. And obviously, setting up a business trading account is very quintessential to your success as a business trading company. A question we get sometimes is, when I fund my new trading business account, does it matter whether the funds come from my business checking, my personal checking, or my personal trading account? The answer is not really. The important thing is to properly bookkeep the transfer as capital contributed to your business. So That said, however, we'll often recommend, just to simplify the bookkeeping, making all contributions and distributions to and from your business trading accounts. If you do this first, this will definitely make the accounting for the flow of capital easier, especially if you use a system such as QuickBooks Online. And the reason for this is because a lot of times these bookkeeping softwares will automatically download the transactions, saving a lot of hassle from having to do any kind of data entry on the bookkeeping side. However, when you do get these downloads, if you don't see the flow of capital from a business trading account, because it can't download the business trading account transactions, it's only downloading the business checking account. If you can't see what's going from the trading account to your personal checking account, then you're completely bystepping that business checking account's transaction feed. This results in imbalances that might be difficult to explain down the road, especially years down the road if you ever needed to explain this to an auditor. That's why we always recommend doing it first through that business checking account, because it's going to be much easier if you have to explain how much equity and how much debt you have and how you reimbursed and paid yourself from your business. So something else to keep in mind, just making sure that you keep all those transactions properly recorded in your bookkeeping system. Many of our clients, when they receive their corporate books in the mail, sometimes they'll find a section in their articles or in their bylaws regarding a Section 1244 election. Should I worry about making a Section 1244 election? Well, first, let me explain what a Section 1244 is. Section 1244 is a part of the tax code that allows shareholders of qualified small businesses to take a one-time $50,000 ordinary loss when they dispose of that stock, in addition to the annual $3,000 capital loss limitation that we're all entitled to. That $50,000 ordinary loss is for, like I said, qualified small business stock. Usually this is for C corporations, since S corporations already have that pass-through feature to the shareholders. However, there are specific requirements that you do need to be able to prove that you qualify as that small business. So definitely talk to your tax professional, because this is some very advanced tax planning. Whenever we set up a trading business, we want to make sure that we're looking at the end from the beginning, that we have a full plan and not just getting you into a boat with a plan to an exit strategy to get off the boat down the road. So unless you're capitalizing or funding your business with more than $1 million, you're probably already qualified as that small business stock, and you might not need to make any Section 1244 election. But again, double check with your tax professional, because everyone's situation is different. For our clients who have out-of-state companies, a lot of times we get the question of whether they need to hire a registered agent. A registered agent is a person that is designated to receive official correspondence from the Secretary of State in service of process when a company is party to a legal proceedings. Service of process, just to explain, is if you're being served, especially if you're being summoned to court or being sued. So you do need to have someone usually in the state of incorporation who can receive that information, and often the person who is going to be your registered agent not only might charge a registered agent fee, but sometimes will also charge a mail forwarding fee. So that's something else to consider as you look at registered agents. We do have some recommendations, and we do have very good registered agents in different states that we've worked with in the past who we've had good experiences with. The registered agent can be an officer, an employee, an attorney of the business, or a third-party service. And again, ideally, the registered agent should be in the state in which the business is incorporated. So if you are if you are incorporating in your home state that you live in, you're probably going to be your own registered agent, and you don't necessarily need to hire another registered agent unless you do have a external business address outside the state, or if you don't want to have any sort of direct contact with the person who might be delivering that service of process. Once you have your own business, and especially if you're the only owner and employee, we often get a question whether they should switch their mortgage, utilities, internet, and other services to the name of the business. The answer is it's only a matter of preference. Let me back up. A lot of these transactions, and expenses are indirect expenses. They could be deducted as home office expenses, such as your mortgage interest and property taxes, which are ordinarily itemized deductions, can be allocated partly to the home office expense deduction. Part of the utilities, internet, in some situations also cleaning and gardening, maybe depreciation on your home. There's a whole list and slew of expenses that you might qualify for, and it's only appropriate if you did have these expenses, especially if certain ones are more business related, to just have them paid straight out of the business. And whether you transfer those utilities and internet services into the name of the business or whether you just pay them out of the business, it's mostly a matter of preference and does not have too much, there's not a whole lot of difference whether it's in your personal name or in your business name. The big difference, though, is how you transact these in your books. Are you recording these transactions as personal expenses or as business expenses? How's your chart of accounts set up? Do you have direct and indirect costs set up? There's a lot of different transactions, and that's why we do have a bookkeeping service to help set up the chart of accounts, direct these expenses in a correct way, and make sure if you have any questions down the road as far as recording these transactions that they're answered, because this is a common question that we get frequently from new business owners. So your business has been profitable and you've got money in the big bank account. The question now is, how do I pay myself and take money out of my business? Well, this depends on your business and your personal tax and financial and legal factors. There's many different ways to pay yourself or take money out of the business, and they all have very specific tax, financial, and legal implications. But here's a quick list just to tickle your fancy. The first option that we have, and the most common one we see, is the payroll. And when you do a payroll, that also opens up other options. You can do a 401k deduction to a 401k retirement plan. You can have health insurance benefits, education benefits, other fringe benefits. However, payroll is the most complex, and you still have payroll taxes associated with payroll. And we always recommend that you use a payroll provider. We've had great experiences with a certain payroll provider, and we'd love to help set that up for you if you are looking to set up a payroll. But other options include just doing a straight distribution of equity or principal from the business to a personal checking account. Many business owners, that's what they do. They just take money out of the checking account and they move it to their personal, or they just use that to pay for bills. Now, we do want to make sure that all the transactions are being properly recorded in the books. If ever questioned, rarely will the auditor look specifically at what the transaction was. Often they'll look at how you recorded the transaction. There's many different ways to record a specific transaction depending on the accounting and bookkeeping rules and how you record that transaction. So often we see people just taking straight distributions, and this may or may not be advisable. We also can do interest from your business, especially if you have a shareholder loan with your trading business. There's also the ability to do dividends on stock, to have self-rental agreements. There's reimbursements of expenses, and you can always distribute property from your business too and count this as income to yourself personally. There's many different ways to have these transactions recorded and to be able to do that. And again, talk to your tax professional, because these do have impacts on both your business and your personal taxes. Many of these have to be reported properly using either a 1099 or a W-2, and there sometimes can also be legal factors involved that you'd at least want to be aware of. Some new business owners, when they are opening up the business checking account, will get a question, what is your business activity code? And this is very difficult to determine, and it does have a significant impact. Maybe not necessarily on the account that you're setting up with a bank, although I'm not a banker, maybe it does, but I do know that this is the same code that's used on your tax return to classify what services you perform, and you want this to be accurate as possible. I believe that this is the same code that the IRS will use to put you in a specific bucket, and when they determine what's your likelihood of being audited, because what they'll do is they'll take your numbers on the return, match it up in a ratio analysis to other returns to see whether certain areas or certain deductions you're claiming are excessive in comparison to other businesses. For example, if you're a trucking company and you have the business activity code of a transportation company, obviously gas and depreciation on your vehicles would be much higher than if you were to have a law office that didn't have any kind of travel or no vehicles at all. Maybe law offices will have different expenses that are high. And the IRS recognizes that each industry has its own unique accounting treatments. So in general, and this is not a specific recommendation, we do see that securities dealers tend to have the business activity code of 523110, and for people who primarily deal in commodities, this might be in futures or specific commodities-based options, or even Forex, might be qualifying with the business activity code of 523130. For the most part, we look at what is the majority income, time, assets in that specific business activity code. So there's many different factors, and definitely talk to your tax professional at which one is the best. It's sad to see when someone does either get an audit or if they've had the return prepared and they reported the wrong business activity code, because this might not necessarily be the most accurate. So again, double check with your tax professional, see if this is the right code for your business, because it does have this code is significant for several purposes. So that was the last little bit on questions and answers from new business owners I want to cover, specifically regarding entities type questions. I did want to cover a little bit on tips for reducing your risk and proper record keeping. So here's a list of things that you can do that are depending on how much time you have and what your risk tolerance is, you can look at incorporating in your business. So the first thing that we have is a bookkeeping software to track income and expenses, and that you can use to reconcile your books to statements and review quarterly. This is specifically because many times we've seen people have QuickBooks accounts, and that's great that they're tracking that income and expenses, but when we take a look at the bank statements or the bank balances, we see that there's a huge discrepancy. Well, if you're reconciling your books, your bank statements to the accounting records, a lot of times you'll be able to find those discrepancies and balance the books properly. Often we see that there's transactions that have been double booked, or there were missing transactions. And if you at least do this on a quarterly or on a semi-annual basis, then you'll be able to keep that in record, in check. Many people will just do this at the end of the year, get it all up to speed and balanced, so that way when they provide your tax preparer with the income statement and with a balance sheet, these financial records are accurate, because this is what's being reported to the IRS on your tax return. But we definitely recommend using a bookkeeping software to track these income and expenses, because it's also going to help you catch any other transactions or expenses that you might have otherwise missed. So a huge plus in reducing your risk, and a huge help in also making sure you don't miss any expenses and thus save you on more taxes. For trading, investing, and real estate activities, these are areas where we'd probably want you to also keep a weekly log of the time spent on each activity. Don't need to do it every single time you spend time on an activity, but at least on a weekly basis. Take a look back and see, how much time did I spend trading? How much time did I spend on real estate? How much time did I spend on investing? Very similar to the next point, which is a mileage log. These weekly logs of how you spend your time will help your tax preparer determine whether you're entitled to specific tax treatments or tax deductions. Whether you're a real estate professional or trader in securities have huge tax implications, and they do look also at how much time you spend on each activity, especially for the real estate professional. The next suggestion is keeping a mileage log. While we know there's a lot of people out there who just estimate what they have, estimate their mileage for the year, you have to keep a mileage log, both for the business miles that you drove and for the total miles you drove for the whole year. Even if we are only taking the standard mileage rate for any kind of business miles driven, we still need to know what the total number of miles were for the entire year that were driven with that vehicle. So there's a lot of smartphone apps that are out there that will help do this. They'll even work in the background. All I have to do is just swipe and categorize whether it was business or personal at the end of the year. It might be a little bit time consuming, but it's going to save you a lot more time than having a pen and paper that you keep in your car, which you might forget at the end of the day. Another suggestion is keep both a print and electronic copy of your tax documents and tax returns. While not very common with an increasingly electronic world, this makes business faster and makes communication more efficient and effective. However, it's not it's still possible to have your server crash, to have data be stolen, to have natural disasters wipe out your computer and your hard drive to be erased. And same thing goes for print records. We've seen many people who've had either floods or fire destroyed their only paper documents. So we recommend having both a place where you keep a print copy, a hard copy of these documents, and also an electronic copy. And if you have an electronic copy, you could go a step further. Have a copy not only on your computer, but if you're comfortable using a cloud, I know there's a lot of very secure cloud document storage portals that you could use. One that we use is Smart Vault with our own clients. You can definitely load the documents there. But that way, in case anything were to happen to your house and it wipes out both your print records and your hard drive and your computer, you still got a copy in the cloud. Plus, my own personal favorite is it just makes sharing documents very, very convenient. I can do that straight from my phone. Another suggestion, a tip we have, is you review, sign, and place with your corporate documents any agreements or major decisions between your business and yourself or others. This would include self-rental agreements, shareholder loan agreements, especially if you have a brick-and-mortar business and you've got many clients. I used to do the accounting for a trucking company, and whenever they were to purchase real estate or they were going to sign a big lease, if it was over a certain dollar amount, they would just make sure they'd have that recorded in their minutes and recorded as a corporate document in addition to their bookkeeping records. That way they could keep track of all those the approvals, so that way they could justify it if it ever came up in an audit. Another tip is to keep receipts and meals. Another tip is to keep receipts for meals and travel. Write on the receipt who you ate the meal with, what the business purpose was or the topics discussed, what the trip was for. Those are things that are commonly overlooked, is actually writing those things on the receipts. But that will be asked by the auditor if they were looking at every single receipt, is to really determine whether this was a business meal or whether this was a personal meal or trip. The last two suggestions, at the end of the year, download your monthly bank and credit card statements for the full year. Very simple, very quick, and very, very hard to get if you ever have to request those records years later in an audit. A lot of times banks won't provide those very easily several years down the road. So just make it a habit when you do your taxes to download a full year's worth of monthly bank and credit card statements. In addition, if you want to go a step further and really help out anyone who's going to be helping you down the road, if you also download those transactions in a .csv format, this will produce a spreadsheet that if you ever need to analyze that information, it can be uploaded into a specific bookkeeping software or it can be analyzed manually in Excel. So those two types of downloads would be very helpful. And lastly, before the end of the year, check in with your tax preparer. Believe it or not, there's a lot of things that are not on this list that we might find that would help reduce your risk or also just help you keep better records and be more efficient. I hate having clients come in and they have hours and hours and hours that they spend keeping all their records accurate and getting it all together. And I feel bad for the person who comes in with a shoebox of receipts for the last several years because they've missed out on great opportunities to find ways to save themselves on money and taxes, and chances are they probably missed some expenses too. So it can really save you a lot of money by having the right record keeping and by reducing your risk. So that's all for today. This was June's special topic monthly webinar. If you have any suggestions, we'd love to hear it. And again, this is from OTA Tax Pros. Michael Atias is our Director of Tax Services. If you have any questions or would like to schedule a consultation, feel free to give us a call at 855-682-7767 or email us at info@otataxpros.com. Also check out our website at otataxpros.com.